All right, there's a whole lot going on with respect to gold extending its record run, $3,601 an ounce in early trading this morning. It was only 48 hours ago that gold was at $3,500. So it continued. Can gold get to $4,000? That, of course, is the question. Also, Bitcoin falling by 0.31% over the last 7 days. What is it? About 4%, and it's down from its highs of 123,000 back in August the 23rd or so. Asian markets are in a bearish territory. It's just the Kospi and the Nifty 50 that are in the green. Everywhere else, investors are worried about tariffs. They're worried about geopolitical concerns and so on and so forth. Seeing what's going on in China, the U.S. and everything else. So that's bleeding into the markets. And the bond yields, the Japanese 30-year bond, 3.28%. That's an all-time high. The 20-year 1999 peak of 2.69. Even the UK 10-year bonds, of course, inverse relationship with prices, 4.8% as of yesterday. The U.S. 30-year bond, that's at 4.9 as of yesterday. We'll see what trading looks like, but bond yields continue to rise. U.S. markets returning from a holiday on Monday. Yesterday's trading Tuesday, all down. September, although historically not really a good month for stocks over in the United States, but Dow Jones, S&P 500, the NASDAQ, all heading downwards in yesterday's trading. Europe, though, was bearish yesterday, but on the up and up in early trading. So we'll see how things go there. But across the board, pan-European stocks in the FTSE 100, CAC 40 and the DAX. Of course, there were a whole lot of worries about the bonds there, and the stocks are responding to that yesterday. But the stocks seem to be on a pickup this morning. We'll see how they trade through the day as trading continues. So it's still very early days over in Europe. So let's talk about these markets, commodities with our guest joining us from Stockholm in Sweden, Erick Mokaya, who is the founder of Mwango Capital. Erick, good morning to you. Thank you so much for joining us. I guess I wanted to start with gold and get your take on the run you've seen there. And, is it us investors fretting, or should it be added to a portfolio?
Thank you for having me. Really nice to join to discuss global markets, of course. I think the context in which gold is rising is mostly the geopolitical environment, as you've indicated. In a world where people are dealing with tariffs, a lot of geopolitical risks are rising in terms of war and the U.S. just backing off being part of the global economic system. I think it's natural that people or investors go to flight to safety mode. And that means maybe piling up into gold. I think that's why it's been performing pretty well. I checked, it's up, I think, 30% this year. So I think that's, it's a good place to be parking your money as you maybe wait out and see how the storm plays out in terms of tariffs and geopolitical risks generally.
Erick, I've always been a bit cautious talking to asset managers and analysts and CEOs and executives like yourself about Bitcoin, but any thought? It still remains pretty volatile. What's your take on what you're seeing with the volatility in crypto, particularly for Bitcoin?
I think the past year, what has happened is Bitcoin has gained prominence, especially amongst institutional investors. So I think it is a year and a half ago that companies like Blackstone or BlackRock launched ETFs that are focused on Bitcoin. So it has given Bitcoin the institutional impetus it needed to be kind of a global market. And of course, the U.S. Government has been pretty positive towards crypto generally. So I think that has given Bitcoin some solid grounding. I think that's why you'd be surprised to see like the past year or so, Bitcoin itself is up around 100% in the past year. So I think it's hard to ignore. Myself, I'm not an investor in Bitcoin generally. I own 0.002%, 0.0002 something of Bitcoin. So it's not like major part of a portfolio, but it's something that's worth watching in terms of how it proceeds. I think the most interesting bit is that the U.S. government itself has chosen to get more and more involved in crypto. It has become more a crypto positive kind of environment. And when the U.S. itself gets involved in that regard, then that means the EU wants to be part of it. China wants to be part of it. I think that global backing by governments gives it institutional leverage and just prominence among investors and all. So I think it's something to keep watching. Might keep pricing in the next couple of months and weeks as maybe more institutions get in. I think that's my take on it.
Gotcha. Now, going to Asia, Asian markets this morning, a bit bit volatile, most indexes in the red. But I did want to get your thoughts on the margin loans in China, which are 2.28 trillion now, I think about 320 billion. A new high for the margin loans over, and of course, margin loans being, money you borrow to buy stocks. What do you make of that? Is that speculative, or is that just testament to the bull run that we're seeing over in China?
I think, the markets in China have been on a tear. I think they've really been performing pretty well. I think the economy itself has not been performing really well. The government has had to inject a bit of stimulus into the economy to keep it going. It's not visible in many parts of the economy yet, but I think the economy seems to be a bit stable in terms of performance generally. So there's a lot of skepticism around the economy, maybe most likely linked to tariffs and the impact that would have on the economy. Perhaps the trade war between the US and China and how that would play out, maybe a war focused on Taiwan where semiconductors are being made. So I think a lot of things that can make investors skeptical. But it seems like margin loans are up, meaning more retail investors are taking up positions in the market based on loans. It doesn't always end well, as we've seen in the past, to do with real estate, especially in China. So I would be skeptical of reading too much into it. I would more be cautious on that kind of a market where the situation is a bit risky and volatile as it is. But then again, every day is a good time to party and invest. So perhaps that's what investors are thinking about.
All right, I want to go to Europe. The big news with respect to the UK and Norway, this £10 billion financing of warships. In fact, following that, over the last 24 hours, we heard they plan to build for even Sweden, where you are, and I think Denmark as well, a couple, maybe some of the other Nordic nations. But what do you make of that? European markets picking up early this morning, but they were bearish yesterday. What's your take on that deal in that space between the UK and Norway?
I think what's happening in Europe is generally that Europe is having to step up in defense spending, as the US pulls back. So I think the general trend is that Europe generally has to increase its defense spending to at least match the US spending, especially among NATO. So I think European countries are realizing they can't rely on the US like they used to in the past, which was a backstop for a lot of the issues that they're having, say, with Russia, with all these neighboring countries. So now they have to step up their spending. So I think that investment, 10 billion in terms of UK warship deal, is just part of that broader trend. So what's happening in Europe is a lot of defense stock are up almost 100% plus because ever since Freedom Day, was it Freedom Day or something like that, that Trump had in April. So I think since when tariffs came into play, and then the EU has realized they can't rely on US as much. So Europe is investing a lot more in defense stocks, and defense companies are benefiting a lot from that. So I think that's generally the trend. In terms of market performance, I think what happened around tariff days that some investors shifted their investing away from the US into Europe. It was a big of a trend. I think around April, May, Europe's markets have been performing pretty well this year after a couple of years of maybe being a bit more stagnant. So I think generally the good places to invest in is defense, maybe tech around Europe, as Europe tries to buffer up build up at least its portfolio of defense as it tries to help itself out against Russia and those other neighboring countries that are posing a threat to them.
All right, now, since you mentioned the U.S., and I think it's Freedom Day, I think Trump called it Liberation Day, anything he wants to call it. The U.S. markets did return to trading yesterday, and they were down, although I guess September, it looks like it's a bearish month historically for U.S. stocks. But I do want to get your take on that landmark decision from the appeals court, which has bled into the narrative. Your take on this, which says, of course, that most of Trump's tariffs are illegal. I think it's all going to go up to the Supreme Court now. But how are you assessing how tariffs are impacting U.S. investors and I think businesses, and where things go from here?
I think in terms of tariffs, that's going to be a big problem for us for the next couple of years. I think during the Trump presidency is going to be a major theme or topic. So I think that's what investors are realizing, and they're planning to play along with it. So I think like the decision in terms of that has blown a hole, at least in Trump's tariffs. I think that's going to be a major discussion point going forward. Are they legal? Are they legal? Is it possible that you can establish all these tariffs without maybe Senate approval? And I mean, it's a lot to process, but I think generally I would say markets are becoming a bit more numb to whatever tariffs are being put out there. I mean, the largest they increased was around Liberation Day, but then they've gone down slightly. But investors are learning to live with the fact that tariffs are here to stay. I think at first people thought like, oh, Trump is going to renege, and there will be a negative backlash maybe from the economy. But the U.S. consumer is doing pretty well. So nothing much has impacted the consumer directly, and as long as that has not impacted the consumer directly, Trump is not going to change. So it's more of a matter of learning to live with it as it is. Markets are positive today, though. Google is up, I think, 6-7% because of the ruling yesterday, as regards the fact that they don't need to dispose of Chrome or Android. So I think that's positive. Should be that a green day in the markets, I would suppose, for today because of that news.
Fantastic. Eric, I can't let you go without talking about Africa and some of the equity markets here. Looking particularly at, I think, Nairobi, which I think is up about, anywhere from about 40-41% so far this year. Uganda up, I think, about 20. Even I got to shout out Nigeria. Nigeria is up about 34-35%. Even Ghana, well over. But for the East African markets, what's your take on triggers, particularly for the Nairobi exchange or Uganda?
I would say the market has been pretty good in Africa this year. It's a good time to be an African investor. In fact, some of the best performing stocks at the Nairobi Securities Exchange, those ones which have been lagging for a couple of years. For instance, Kenya Power and KenGen are up almost 100% plus this year. And those are power stocks, energy stocks in Kenya, which have been chilling very easily. As you can tell from your chart there, Ghana, Kenya, Nigeria, South Africa, Uganda. It doesn't matter where you put in your money this year. Seems like it's been a good year to be an African investor. So in East Africa, I think generally what we are bracing ourselves for is elections. Elections are coming up in Tanzania in October. We have in Uganda next year in February. And then the year after that, 2027, we have Kenya. So I think that's a risk that investors should be worried about. In Kenya, the central bank is trying to reduce rates as much as possible. They've reduced rates around 400 basis points in the past year or so, trying to stimulate the economy, trying to stimulate loan growth, which has been lagging. So generally, that's the major issue to pay attention to. But despite of that, banking results for first half of the year, most stocks are doing well. I mean, most companies or most banks at least are making good profits, even though the returns have gone down slightly. It's not that significant in terms of impact. And maybe something else to watch out for in Kenya is the non-performing loans, which have been pretty high. A bit of consolidation also going to happen in the banking sector in Kenya, given the fact that there are new regulations in terms of core capital requirements. So lots of things to pay attention to, but generally I think the investor mood across East Africa is very positive, and whatever stocks you choose, I think they're doing pretty well. I think at the NSE, last I checked, only less than 5 to 10 of the 65 plus stocks there are not green for this year. So I think that's pretty impressive, to be honest.
It is, and it's a good story. But Eric, any worries? I mean, a rising tide, lifts all boats. And you mentioned the need for consolidation in the banking sector in Kenya. There in Nigeria, the president here just signed a reform for insurance stocks, and insurance stocks did about 40% in 1 week. Even stocks that had been laggards for so long were picked up. Looking at Kenya, looking at other African markets, is there a need to be careful to not, buy into a frothy market, to at least still look at fundamentals with any of the names that you're picking as far as reviewing these African markets?
I would say that, yes, you need to pay attention to what you're investing in. But generally, I think like some of the stocks are really trading at really low multiples, I would say. So I think they have more room to grow. But generally, of course, as you invest in the local markets, make sure that you pay attention to both currency risks, geopolitical risks. As I say, the elections are coming up, consolidations in markets. And also, I think like those are key things to pay attention to. And make sure, of course, you're reading about the specific companies and not just investing as they go along. So I think good to be aware on the key things that are happening in the markets. And that's why we're here to keep investors informed as much as possible. But I guess like it's a good time to be investing in Africa. I'm going to be speaking next, I think in 2 weeks, on the opportunities that are available in African markets. I think it's immense. I mean, we need to build up our data infrastructure. We need to build up our energy infrastructure. We need to be investing in green energy. We need to be investing in our markets, in just building up infrastructure across the continent. And I think tapping into all these investors who are also willing to invest in our African markets, I think we need more of this and more of this. And I think it's good that you also pair that on your show, you highlight African markets as much as you can so that you can get more investors in the market. We need them more. The markets are young and they need your help to grow.
Hey, we're happy to keep reporting on the African markets and happy to have analysts like yourself that cover it. Erick Mokaya, founder of Mwango Capital, always a pleasure. Thank you so much for joining us there live.